What's up, guys? Today I'm going to be explaining the two different ways to get an entry using the inverse fair value gap strategy. Now, whichever way you want to use is up to you, whichever one you feel more comfortable using and whichever one you prefer to use. So let's get into it. Now, with this first example, you can see we have delivery from this fair value gap here, and we have a 3-minute here. We also have a 1 minute and a 2 minute, but the 3 minute is the highest time frame. There is no 5-minute fair value gap here. So there we have this 3 minute with delivery, also a sweep of this. And right here we get the inverse. Now, the two different options for entry are, number one, you can just straight up enter like this with a market order right here, boom, right? You can enter right here at the inverse. Or what some people like to do, instead of entering with this inverse here, for a better RR, you can set a limit order to enter if we retrace back to the fair value gap. Now you can see we do get a better RR, or maybe you just don't have to target as high for 2 risk reward. Now the only problem with this is that price doesn't always retrace back to the fair value gap before going up. So this, you get a guaranteed entry because you click the entry yourself with a market order option. And the other one, you get a better RR, or you just don't have to target as high to get the same RR. But the only problem is you don't get a guaranteed entry. So you can see if we enter here, stop to break even right here, stop loss to break even. We hit 1R, so close one off, and full take profit right there. So now what you do also notice is if we had set up a limit order right here, right? If we set up a limit order here, like this, if we set up an order like that, let me see on the right, if we set up like this, you can see it never gets hit right there. So you don't get your entry here and you do miss out on the trade. So me personally, I use the market order and I would have entered right here. But it's all up to personal preference. Like if you would have gotten this entry, you wouldn't have had to target as high for that 2 risk reward. Or if you targeted the same, you would have gotten a better RR, but we never got the entry for that trade if you use the market order. So that's the only problem with, or the limit order. That's the only problem with that type of entry. Now I will go into another example real quick. All right, now we are on the 1 minute and we have a fair value gap here. There is no 2-minute fair value gap here. So we have a 1 minute, just took out these equal lows here. So we do have a liquidity sweep. We fix this. We do have a liquidity sweep here. And let's see if we get an inverse. And we do get an inverse here. Now this inverse did not close that high above the fair value gap. But if we set up the trade like this, you can see we could target this, or we'll target 2R. Now, this one is not that far above, so you could just take the entry here because you're not getting much better of a risk to reward if you wait for it to come right here back into the fair value gap. But what we'll do is we'll wait for it to come back to the fair value gap. Boom, right here. We do get our entry right as it comes back. Because what we would do is, there's a couple of things you can do. The first one would be to set up your order right here, right? This limit buy, or you could set up a limit buy in the middle of the fair value gap. What some people do, like if it closes this close, some people might wait for it to come down to here, or you could keep it right here. Either one is fine. And the reason why we would put it in the middle, some people choose to, is because they want to put it on the retracement to the median threshold of the fair value gap. So they would put it right here on the median threshold of the fair value gap. But either one you can do. It's whatever you want to do, whatever risk reward you're looking for. Maybe this didn't close too high, so you want a better retracement to the median threshold. Whichever one's fine. But we'll see right here, we get this retracement. So we get that entry, right? And then right here, if you were waiting for that retracement to the median threshold, you would have gotten it. Let's say we put it at that median threshold just because we can't really get it to give us this entry right here because we can't use limit orders like this. So right there gives us, like, let's say an entry right here at the median threshold. And then the limit buy would have been right here. Got in right there. And you can see as we take out this internal, we already can take profit right here. Or maybe even wait till right there. We get a little bit out like to 1R. And then right there, we get stopped at break even. Stop at break even. Then we get stopped at break even right there. But if you would have taken this off of this entry, if you would have entered right there on the close, stop would have been at break even right here. Is this 1R yet? We did hit 1R, so there would be a partial right here for 1. And then stop would have been hit at break even as well. So both of those would have been fine in this scenario. But as you can see, it really just depends on how you want to trade and what risk reward you're looking for. If you want to get your entry right at the close of the candle, or if you're willing to risk it for the better entry, looking for maybe retracement to the median threshold like we did here because of how close it closed, or if you just want to retrace to the fair value gap, it's all up to what you want to do, but you're not guaranteed to get an entry if you use the limit buy method to get a better entry. So you get a better entry, but you don't guaranteed get an entry because you have to get a retracement and you're not guaranteed a retracement. Sometimes, like the other example, will inverse and just continue upwards. If you guys learned something, please leave a like. If you guys have any questions or any suggestions, leave a comment down below. Join my Discord. It's free in my bio. And I'll see you guys later.